All right, today was a pretty good day. We wrapped up the week higher in markets as there was this digestion around the regional banking sector fears and this private credit market scare and how they're related and what can arise. That's days ago. We got new news today because Trump gave comments on China talks, and that was really what set the tone today. And what happened was Trump walked back and lightened up his stance during this interview we got today, saying we first got that the U.S. is going to be fine with China. He admitted the 100% tariffs he had threatened to impose on those Chinese goods by early November. Those aren't necessarily a sustainable level, but he did add that Beijing had forced his hand and that the levies could stand, but it seems like the general consensus is that they want to lighten the load. They want like some kind of negotiation to take place because we want lower percentages on those. We want a deal. And then Treasury Scott Bessent came out and confirmed that he'll be speaking with his Chinese counterpart to discuss further easing tensions with China, and they'll meet again next week in Malaysia before the possibility of Trump and Xi Jinping visiting later this month. And what Bessent said is that he thinks things have de-escalated, and we'd like to see that further continue as far as a green light for equities to head higher, and this can keep getting kicked down the road. And that's the sense of calmness between the two countries which helped lift the sentiment we've seen across Wall Street today, even as there's these concerns lingering like the regional banking sector I mentioned in that private credit market risk, which those two topics are related in this sense. So today what we've seen is the Dow climbed 0.52%, the S&P 500 gained 0.53%, the Nasdaq finished up for the week 0.52% on today. Up for the week, like I was saying, the major indexes closed the week all in the green, which is a good time for everybody. The party's still partying, even with those concerns only days behind us, like yesterday and the day before. Now, bring your attention to the bottom right chart. Right there, that is the VIX. That's the volatility index. That's what people refer to as the fear gauge. And that jumped as high as you can see right there. On Webull, it shows 28.41, and that's its highest level since late April. And that kind of move otherwise, especially on a day where stocks were positive, like it's been a pretty good day, it shows that there's just this kind of like it's kind of like hot in this room, this party we're having. It's just kind of getting hot in here, and it shows that people are just kind of discussing with themselves and taking action into that, to be piling into options that would pay out in the instance of a reverse in markets, like not even a crash, just a little correction. But it does show that there's this pricing in of a shock being bought out right now. So this one was interesting. People are piling into positions, these option positions that would pay out if the VIX surges above 47 or 50, which is a sign some people are still expecting some major shock somewhere beneath the surface, and that insurance may have just been a bit cheap to pick up. But the level of that bet is kind of wild. And then Bitcoin, look where Bitcoin has been going. It's dropped 1.6% to 106,000, pretty much 106.5, and that's its lowest level since July 1st. And this is a sharp reversal from where we were on this chart, being as high as 126,000 literally just days ago. And much of that pullback came right after the U.S. and China trade tensions picked back up and entered into the news. And as uncertainty rises, money tends to rotate and flock out of riskier assets, riskier trades, which, yeah, some people view Bitcoin as this ability to spend money out of a system. It's deglobalized money. It's digital gold. It's the ultimate savings account. But some others view Bitcoin, at least right now in its current time, as this trade that tracks. It's more so like a leveraged Nasdaq type of play. And for Bitcoin to be moving down the way it is, it could possibly be foreshadowing what's to possibly come from the stock market, as we're seeing Bitcoin move the way it is, and then we have the VIX just just it's all just kind of weird the way everything's moving. And then this top left chart, this is TLT right here, longer term bonds. Remember that. Now, when the bond price goes up, the yield goes down. And that is reflected if you pull up CNBC real quick and we look at the Treasury yield. So this isn't necessarily what TLT is, but it kind of tells the same story. So the 10-year Treasury yield fell to, yeah, right there. Look, you can see it. So let's even zoom out even more. It'll be more obvious. Not really. It's been up for a while. So it fell to its lowest point in 6 months, marking 4 straight sessions being below 4%. So if we go year to date real quick, what this is drawing attention for, why this is important, is because yields dropping like this often point to this growing worry of some type of concern, another concern about economic growth ahead. And some of that pressure could be tied to those concerns that arise from the private credit markets, like the names of Tricolor and Western Alliance, those regional banks, that's tied into this risky lending that was going on. And now there's lawsuits and headlines all over the place, which, by the way, Zions Bank reports on Monday. I bet a lot of people will be watching that. But together, those headlines, they've all added fuel to the fire for the fears of credit stress spreading within other small regional banks. And that would be no bueno, everybody. And then meanwhile, the federal government shutdown has now stretched into its 17th day, raising worries it could become the longest in history. Everybody I'm talking to seems to think we're going to get right around that record, if not surpass it. And what economists are estimating will arise from this is that it's shaving off between 0.1% and 0.2% of GDP each week. The government is shut down, which, yeah, it looks like a small number, like, Joel, that's not even 1%, but billions of dollars. This is billions of dollars lost output over time. And more than 4,000 federal workers have already received layoff notices, and the White House's budget director said that the number could end up north of 10,000. A federal judge temporarily blocked additional layoffs earlier this week, but the uncertainty continues to ripple through the economy as all of this uncertainty and all of this fear is just at the top of everybody's minds right now, as stocks are yippee-yay high at all-time highs. But a market poll watch found that nearly half of Americans say their biggest concern about the shutdown right now is the potential hit it will have on the economy, and ahead of travel disruptions or lost paychecks for government workers. We're not even talking about that stuff. We're talking about the effect it'll have on the economy, the economic damage that will arise from that. So it seems like people's using their thinking brain right now. Like, it's like they're kind of waking up to this. And this was an interesting read today. Unemployment claims from federal workers have more than doubled to 7,200. This is the highest level since that of the 2019 shutdown. And with no new labor data or inflation data being released during the shutdown, markets are heading high as the Fed, well, they're technically both just driving down the street with their eyes closed. Forget the flying blind crap. They're driving with their eyes closed on the highway with their daughter in the back seat without a seatbelt, smoking a cigarette. That's how they did it back in the day, right? Now, despite all of the uncertainty, retail investors have continued to buy every single dip. It's been a good time. Buy the dippity-doo law is how they're saying. Last Friday, this is history right here. It was the largest retail buying day since January of 2021, the height of the meme stock mania. It's starting to sound familiar, right? GameStop, AMC, and it makes sense why some analysts are viewing this as a cautious signal, like just tread lightly, everybody, because, yeah, it's all fun and games when we're piling in to cause it to go up. But just like if there's a fire in this building with one door and there's like thousands of people in there, what happens when everybody tries to run out at the same time? So studies have shown stocks that are most heavily bought by retail traders, they tend to lag the market by about 5% over the next month. And I'd imagine that's just because people are, and that's a Robinhood market study. I'd imagine it's because some people are just trading and trying to price everything in and outsmart the market. So up. If you know, you know. But it doesn't guarantee there's some pullback by us discussing this. It just suggests that you might be seeing a lot of comfortability in stocks, or I wouldn't even just say stocks, and asset values with where they are at these values that they're at. These highs would be the correct word. And if you think back to the VIX and the Bitcoin talk we had earlier, and don't even mention treasury moves we've seen, because treasuries are known as this safety play. People flock to safety in these treasuries. Who knows if they're related or not, these sell downs in Bitcoin and this bump up we see in the VIX. We don't know if they're related, but just closing out, the close of this week, trade tensions look to be easing, volatility is climbing, bond yields are dropping, and the government shutdown is dragging on with real economic costs, y'all. And our main takeaway here is uncertainty heading into the weekend. Hope your day is awesome. Hope your weekend is awesome, everybody. And I hope you have a good one.